Success in Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. It's the Financial Survival Network. You need us more than ever. I assure you, if you've been watching the events unfold of the past week, Swiss franc decoupling from the euro and the fallout that's occurred after that. And we've got Ned Schmidt of the Value View Gold Report and the Agri-Food Value View with us now. Ned, welcome back.
Hey, it's good to talk to you. How are you today?
Always good to talk to you, Ned, too. And hey, these debt bombs are detonating around the world. Who would have thought a little thing like the Swiss breaking the peg to the euro could have such catastrophic results?
Well, who could imagine people believing that 50-to-1 leverage doesn't have any risk? I mean, people were going out and buying these $10,000, let's talk about it, it's a $10,000 value contract to go short the Swiss franc. They only had to put up $200. And these are people that aren't used to using leverage. So the more they could get, the better. And leverage is debt. You borrowed money, and when you lose on that, you have to pay. And the difference is, in the futures market, they don't give you 30 days to work out your loan. You got about 30 seconds. And when that market moved 41%, in a short period of time, it just wiped out a lot of investors. They're going to wish they'd been in gold.
Yeah.
So that's the first debt bomb. I mean, you can't even tally up the losses yet. I mean, I looked at a tally this morning, somebody trying to tally it, and adding the ones they didn't know. I mean, that's published losses of over $1 billion that occurred in a 24-hour period. And all of it was because people took on debt. And leverage through a futures contract is debt. It's just like going out and putting a second mortgage on your house for 150% of its value. You're going to end up losing money on it. And the pain is there.
Big money, right?
Right. You know, but there may be some side benefits of this or some side issues that one-way bets in the currency market was last year's game. And so we may not see, well, I firmly believe we'll see the end of this dollar rally because people are going to cut back on their currency bets. We had the big hedge fund down in South Florida that disappeared over the weekend, $800 million. If you're the chief investment officer for a hedge fund, you're not going to let those guys do any more of those big one-way bets. So that's going to happen. The other thing is it reignited interest in owning an asset like gold and silver as currency protection rather than risking your financial net worth in something as flaky as a futures contract. So I think as gold and silver both showed last week, they are the only true defense against currency issues. Futures are not, and people need to recognize that.
Yeah, well, future is a contract, right? It's just a piece of paper, basically, but it could be a very costly piece of paper when you come down on the wrong side and a major movement happens, right?
Right, I don't think people understand they're trading a contract. They're not trading an asset.
Mm-hmm.
And that financial performance by both sides of the contract, the short and the long, is required every day, and that you have to have that money in your account when the clearing corp settles the accounts every night. You know, it's not like owning a stock when it goes against you. You just sit there with it in an account. When it goes, futures contract goes against you, you are required to have money in your account to pay up that night. And so if people don't fully understand the mechanics of the futures market, and I assure you, I listen to gurus on TV and read articles. 70% of the gurus do not understand how the futures market works. They do not understand that it's a contract, it's a zero-sum game, and you got to pony the money up every night.
Yep.
Well, they do now. They do now.
The hard way, huh?
That's right.
The hard way. And yeah, nothing fun about it.
But this currency market, what's been going on this past year, is setting us up for a whole lot of problems. The other big debt bomb out there is all these banks and corporations in developing nations and in Europe even that have borrowed dollars over the last couple of years, not understanding there's a risk there. And more importantly, the lenders don't understand there's a risk there. If there are two currencies between the lender, investor, and the ultimate consumer in that country, there's a currency risk. And I'll give you an example is Turkey. Banks in Turkey owe about $98 billion as of October in dollar loans. They borrowed dollars. Well, if in 2011 you borrowed $100 million, if you're a Turkish bank, you had to convert that to lira to lend out to your customers. So that $100 million loan was worth 150 million lira. Well, today, to repay that $100 million loan, you got to come up with 230 million lira, 50% more than you borrowed. They don't have it. They can't get it. And even if they can get it, they can't convert it to dollars. Nobody would do it. So we're going to start seeing banks and businesses in these developing nations that borrow dollars with some real trouble. And I don't know who holds all that bad paper. It's the big banks and hedge funds. Mm-hmm. Even in Europe, we're going to see that because the euro's got beat up so bad. There's going to be borrowers that are going to find even in Europe that they can't repay their dollar loans. So right. So it turned out they were actually borrowing. They were shorting without really thinking about it, just assuming that's right. They were shorting their national currency. Right. Which was not the thing to do. No, they were long their national currency. Right. They were shorting dollars. Yeah. And turned out not to be such a great idea, did it? No, it never does. I mean, this is where the Mexican peso crisis came from. Uh-huh. I mean, you and I were talking earlier. It's as if the world refused to pay attention to history. I mean, currency pegs always collapse. Yeah. Borrowing outside your national currency most normally leads to problems. Yeah. And these are lessons that we've learned in history repeatedly. And people don't want to do any history reading. They just want to turn on a piece of software and become immediate geniuses within an industry. Well, you know, software never learns from history either, right, Ned? Right. And by the way, I meant to tell you there was an article the other day about using 3D printing to print out meals for the military. For the field. We had talked about that a while ago, you know, and, they're actually going to use 3D printing to print out food. Now, you laughed when I made that suggestion about a year ago, and now absurdity becomes reality. Well, as you're telling me that, I'm thinking that some of the Army meals that I ate might have been better had they come out of a printer. Hey, well, you never know. You never know. And I'm an old guy. I can remember what sea rations tasted like. Yeah, good old sea rations. Then they became MREs, meals ready to eat. And, now we're going to get 3D printed rations. And hey, isn't it great? That's progress. Yep. Isn't that great? So you never know. I'll have to wait till I see it. I don't know. Because I don't know where I would have plugged my 3D printer in. Yeah, that's the problem. It's always assuming you got an electrical connection. Yeah. Which may be the drawback. Yeah. Yeah, it was here on NPR on their blog back on November 4th at 2014. Army eyes 3D printed food for soldiers. And hard to believe, but,
somehow they've got it figured out. And hey, when we return, let's talk about some commodities. Let's talk about gold and silver, where they're headed now that the whole world is in flux and nobody knows what's going to happen on the Financial Survival Network.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
The Financial Survival Network. It's all about what's next.
And in case you just joined us, we're talking with Ned Schmidt, and you know him well from his newsletters. And Ned, so commodities, coppers, it just imploded, certainly the industrial commodities. Where do you see the agricultural commodities coming out from this whole chaotic mess?
Well, the agri-commodities, right now, the northern hemisphere is in winter. So it's quiet time. The stock market problems, particularly the U.S. stock market problems, had been impacting all markets. If you looked around, the only market it wasn't impacting was gold. So agriculture's locked up this winter. And we got about 3 more weeks till winter starts to break. Winter, about the first week of February, is when the worst of winter starts to pass us by. So the system gets clogged up during the winter. I mean, right now, it takes 6 times as long to move a load of corn or soybeans out of the Midwest as it normally does. So nothing's going on there. So the bids get dropped. If you're a grain elevator and you can't move the grain, you don't want to buy anymore. So you knock your bids down. So we're being set up for things to start moving out in February. And the big event this year is going to be that we're still short cattle on a massive scale. The herds in the U.S. and Canada have been drained. It looks like beef production may hit a multi-year low this quarter. And what that means is we do expect it to start to grow. Well, as beef production starts to grow, you've got to feed those cows something. They don't come out of a 3D printer. I'm sorry, Kerry, they're not going to come out of a 3D printer.
Not yet, huh?
You got to feed that cow corn. And what we're going to find out is there's a massive amount of corn that's going to go into cattle feed in the next 2 years as we rebuild the herds, rebuild beef production. China is still short food. They're still short soybeans. So when we come out in February, we're likely to see a strong advance from February on in the agri-commodity sector. There's always going to be winners and losers. But one of the things we discovered this winter, sorghum. I don't think I've ever in my life heard anybody discuss sorghum.
No. Nobody knows what it is.
It's another big grass. The biggest producer is Nigeria. After the United States. It grows in tropical, arid areas. It does very well in dry regions. In the United States, we produce it from, let's say, the center of Texas north, because that's generally a dry area, and the sorghum is natural for it. Well, when the Chinese found out they couldn't get soybeans out of the Midwest, they started buying sorghum. Sorghum has become one of the hottest exports in the United States this year.
Huh.
And so that's because the Chinese aren't getting enough of the grains they need. And so when we come out of February, things are going to look really strong for agriculture.
Right. So February's looking good, huh? So what about the basic corn and wheat. We're seeing a cutback in corn plantings, right?
We're going to see a big cutback in corn planting this year. Monsanto reported for their November quarter, and that's largely sales to South America. And their corn seed sales were down 12%. So we're going to see a big drop in corn plantings in the United States.
Right.
And that's where the surplus of corn is. No place else in the world is there a surplus of corn. So corn, which is the cash market's a little below $4 rate, let's call it $3.90 right now. And we could see corn this time next year at $4.90. That's not an unreasonable. And that's without a tendency of a trend we're starting to see with the problems in currencies and some other things that have been going on. Those people that use futures actively in their investment business are likely start moving back into agriculture, gold and silver, because the other stuff they've been doing is not working. So this is a underinvested area for people that trade futures professionally.
Right.
So we're going to see that. And so are we getting late here? Because I want to mention the GDX.
We got time. We got lots of time for you, Ned.
Okay. The GDX made a low late in the year when gold did. It rallied, and it's made another low this past about a month ago.
Right.
But that low was above the late fall low, and it is now traded above the last short-term high. And if you look at a chart of it, it's got a beautiful rectangle, rising rectangle, and if it trades through 22, that's the GDX, that thing is getting ready to go up higher. And so at this point, once you've got your physical gold and silver, you need to look at that GDX, because it's a beautiful chart pattern, Kerry. It's just textbook picture on there.
Got it. So GDX, huh?
Right.
And that's the miners. That's our gold miners, huh?
That's the larger gold miner. Now the GDXJ is not quite as attractive, but it's still got a nice pattern. And on the GDXJ, if it goes through 30, it's going to 40. You know, it's
right.
Once the train leaves the station, it's going to the next stop.
Right. And
a move above 30 on that one.
Yeah. So we saw the what was it? The market vectors gold miners. That's the ETF. That's the GDX. So
the GDXJ is the juniors.
Right. Oh, this one. Yeah, I'm looking at the GDX. Yeah, I'm not the best technical guy, but so it basically did a double bottom. That's what we're looking at.
Yeah, and it's a beautiful pattern, but it's a rising pattern.
Oh, yeah.
And remember that stocks always anticipate the future.
Right.
And so they're not stocks are no longer looking at the backwards.
Uh-huh.
And if you look at the fundamentals of the companies, if you go through the quarterly statements, what you're seeing is the severe negative impact of the declining gold prices on their revenues is history.
Yeah.
And many of them have rising production now.
And lower energy costs mean higher margins, right?
Yeah, and so the world is definitely looking better. It's not a Goldilocks environment yet, but it's definitely looking better for the miners.
And we got a cup with a handle formation there, right? Right. We're looking at a cup with a handle, which is really bullish. for stocks and commodities too, for that matter. So we got a cup with a handle, and it broke out. So it broke above the handle. So we're looking pretty good for that. Yep, I can see that. And the GDXJ will probably be the next to go. Just got so burned. Yeah. Yep. I see what you're saying there.
And in the ag sector, a couple of them to look at. I don't see any of these suddenly popping, but they're a good time to buy them. Agco, AGCO, Syngenta. Now, Syngenta, the symbol is SYT. That stock, that is a company that produces seeds and plant protection systems, fungicides, herbicides.
Right.
But in any event, they had a genetically modified corn that was widely grown in the Western Corn Belt because it protects against rootworm, which has become a real problem. Anyhow, China had not approved that for importation.
Right.
And a lot of companies just ignored that, bought the corn, the ships got to China, and China said, turn the ship around. They delivered it. And so this caused a real problem for Syngenta. The Chinese government has approved the importation of Syngenta's new genetically modified corn. So that Syngenta is selling at a deep discount to Monsanto because of this seed. But China has approved the seed. And so they're going to sell a lot of this seed now. Then the next two that people should need to look at is Deere, DE, then JBS, which is the world's largest animal protein company. JBS is a Brazilian company, but 75% of its revenues come from the United States. It owns PPC and Swift. And so this trades as an ADR in the United States, JBSAY. It's hard to say all those letters without getting twisted up.
Yeah.
It's JBSAY, and it's a very volatile ADR, but it's the largest and purest meat play in the world. And so this is one investor you need to own. So that's some ideas to get the year going.
All right. Sounds great. So, hey, go take a look at Ned's sites, the Value View Gold Report and the Agri-Food Value View. And while you're at it, take a look at financialsurvivalnetwork.com. Got the links to Ned's sites there. As always, sign up for the free newsletter. Should be having a webinar on very shortly. Ned, always a pleasure. Talk with you again soon. Be well.
All right, Kerry, have a good year.
On the Financial Survival Network.
FSN Radio. It's all about what's next.
Every week, the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.